Welcome to Elton's retirement journey. I wanted to share with you a decision I made with my investment strategy and share that with you because you may be thinking about it as well. And that has to do with the 401k. So, the 401k, I've been doing pre tax contributions since I've been with this employer. And I got that account up to about 55,000. It's all pre tax money. So, any withdrawals from it, I have to pay taxes. It's also in the shield of the 401k, which typically is not like an IRA where I can just sell shares and just withdraw them at will. Within that 401k, it's structured a little bit differently. Typically, you have to have some kind of separations or you're going to borrow the money, which is okay for me because what I'm looking to do is have a bucket that has nothing but money that I've already paid the taxes on. And I figure at this juncture, if I start now and continue to work for the next 5 years there, I should amass a nice amount of money, which will match what I have in there. And I'm hoping that it'll be half and half. 50,000 in pre-tax money and 50,000 in the Roth money that already has the taxes on it. And then I can pick which one I want to draw on. And ideally, I feel that this is going to do it. The first month of June, which ends tomorrow, well, Friday when I get paid, that's pretty much it on the payroll part. It's going to show a balance of about $600 in this Roth account. So I'm using that as a raw number to finish out this year. And then we're going to look at 2025 through 2029. I turned 67 in 2029. And by then, I'll be making my decision on when I want to stop working. The idea is not to work all the way up to 70. I want to come out early. And when I come out early, there will be no more paying taxes because you're not going to have a job. So I'm going to need something to draw on. And that Roth money, it's already got taxes. I draw on it. There's no reporting it to the Internal Revenue Services. It's my money. It's like going to the bank and drawing out a savings account. So, got to have a starting point. Now, this Roth account that is now in effect for 1 month has a 5 year rule where for the next 5 years, any gains on that account cannot be touched. It has to stay in there for 5 years. So I'm going to go ahead and go with that. It's okay because 5 years ago, when I started with this employer, I had a chunk of money and I opened up a Roth. I opened the account up, I put the money in it, the clock started. It was a brokerage account. I believe it's a regular brokerage account. I don't think it's an IRA, but it's a Roth account that I can draw on anytime I want. And the 5 year clock, believe it or not, ends about September 19th of this year. So what that means is that account, if any emergencies come up and there's gains in it and I need cash, I can touch that. And this new 401k account, which is now open for 1 month, this one is like money in a layaway. I'm putting it in for future use. So I'm real happy with that. I thought I would share that with the community. And I also want to talk about how I arrived at that decision. So I added up all the IRAs in the 401k account, and it came up to about 229,000. All that money, as I draw it out, I will owe taxes on it. So I don't want to keep growing that. Primarily, it's all in equities. My strategy is to build up separate buckets that I can draw on for each year. And these buckets, I want to stretch them out. Um, my target is 3 years. And the reason why is you never know what's going to happen. You lose your job. Um, you got to have something to draw on. Maybe you'll get unemployment. You know, maybe you find another job. But if not, and that's one of the big things going around on YouTube is people losing their jobs and some of the problems that older workers are having. And I want to try and shield myself from that. So I think I got a good project going on. If you've been watching my videos, you know I've been pumping cash in over to the VO Bank, building up a long-term account in buckets that for short term. I've got a CD for my trip um, that I want to take. So I feel this is a good strategy, switching to the Roth when I have other funds to draw on and let that 5 year rule run for me while I'm still working and pumping cash into it. Seeing this Roth account grow to say 50,000 or more, I'm forecasting on the high end 55,000, on the low end maybe 38. I mean 38 would be my contributions. The employer should put in a couple grand every year over the next 5 years. It should grow very, very well. And then I still have my equities that'll grow. So I should easily hit at about 300,000. Um, and it's key that I keep working at this because I'm going to spend 100,000 out of all these accounts, whether they're in the IRAs or the uh, the taxed accounts, because the goal is to pay off the mortgage at retirement, which is 2029. Pay that off. That's 50 grand. So we got to have money for that. If I decide to stop working or I get laid off, I need to have some type of cash I can draw on. So I can switch these, interchange them, as I need them, and make sure I come up with the money I need to pay that mortgage off here in this condo. And then also want to have the money that I can bridge my the time before I collect my Social Security at 70. I want to preserve that because you just can't beat the gains that you're going to get of 8% every year from the time you reach your full retirement age. The stock market is not going to guarantee that. It may surpass that, or if it goes bad and those equity accounts that I have go down, with me putting all new money in the fixed income, I should be okay. So I wanted to share that with you as we're all talking about our plans for our retirement and strategies that help us. And the next thing I want to show is how I arrived at that decision. So we're going to move on to an ADP calculator where you put your wages in and your payroll deductions and what your percentage is, and it will work out what your take home pay will be. So you'll be able to look at that and say, okay, I can stop the pre tax contributions, switch to a Roth, and it's not going to put me in a bad situation. So we're going to take a look at that next. Okay, so what we want to take a look now is this hourly paycheck calculator. So I went ahead and did a Google, but in the description, I'll go ahead and leave that with you. So what we want to do is take a look at the this here because it's got your it'll do the calculation. How your paycheck is now with your um, 401k pre-tax deductions, your take-home pay or net pay is what you're used to. This will allow you, this calculator will allow you to put your earnings in for one particular pay period. It's got the tabs for your federal. We're not exempt on any of this stuff here. You got your state income tax. So I'm down in Georgia and I'm single here. I'm filing single this time around. If you were doing the head of household, they've got that down here. The single and the head of household, this can be kind of important. If you ever needed some extra cash, say a significant amount, like maybe say 75 to $125 per pay period, somewhere around there, you could flip to the head of household. They take out much, much less taxes, and that'll bring home your increase your take home pay. But we're going to leave this at single. That was just a tip for you. Then remember in one of my videos, I was talking about knowing what deductions. You would need to get your deductions from your paycheck and put in whatever dollar amounts are coming out on each individual paycheck, whether it's weekly, bi-weekly, or monthly, or semi-monthly. That's where you put all this in here, and this tells you what your contributions are. And then when you come down to retirement, this is already flipped over in my case. So normally it would be here, you put your percentages. I'm at 14%. And then what we would do is we would flip that over, and then you will run the calculation. And it will give you an idea of what your take home pay would be. In my case, it flipped by $50. So then that would mean I'm bringing home $100 less per month. But I want to show you this. This is the hourly paycheck calculator. It's nice to have around because if you got things coming up, you work some overtime, it's always good to know where your money is and how much it is. This is what this will do for you. You can just throw your hours in there for overtime. But I wanted to add this to you, our discussion here, because I think it'll be helpful for you going forward when you go to make those decisions, like switching from the pre-tax to the Roth. Now, this Roth contribution is, I'm going to have to get used to it now. And that's why I have a part-time job. I actually get paid on that tomorrow as well. So, if you have you know, your hours change and you want to stick with this, because one thing about investing, you got to stick with it with this Roth. I mean, that's going to be just fabulous. 5 years from now, I separate from my employer. I roll over these accounts, and I got a Roth account that has the 5 year rule has ran out on it, and I could start drawing out of that investment like it's a regular old savings account with 50 grand in it to cover my living expenses and pay off the mortgage with the other money I'm already pushing to the side. That is just going to be awesome, and that's going to get me off to a great retirement. And as I was mentioning, I was telling you about the Roth account that I had started 5 years ago, which is doing well. Now, that account between the 2022 uh, market correction, where it went down 27%, when I checked it today, it was up 45%. So if we take the 27 and 45, we're looking at a 72% swing on that technology. Um, so it might be something good to get into. If you find a new technology fund, they're going to have the exact same investments pretty much as everybody else, maybe a few variations, but you want to get one that has a very, very low share price, the net asset value, say below $25, which I found one 2 years ago. And it's doing really, really well versus some of the technology funds that are at $100 something. You get a brand new one that just came out and you're able to ride it for a few years like I'm doing, you'll get more shares, they'll appreciate more, and you'll see the big gains. That is what I did. So I feel pretty happy about it. I think this decision is going to be pretty, do me very, very well. And then I do have money put away for other things. But that's what I want to share with you, just investment strategy, because that's what we're all talking about here. So Elton's retirement journey, switching to the Roth 401k. Thanks for watching.